Hello there, my friends. Chris Marcus here with you for Arcadia Economics. Another exciting day in monetary history because I think Zero Hedge really captured it brilliantly. Unprecedented intervention. The Fed will purchase 125 billion in securities each day. Goodness, I think what's so interesting about what's happened in this past almost 2 week period now is that things have escalated so quickly where the Fed's injecting a trillion into the markets, then it's quantitative easing, then it's unlimited quantitative easing, the treasury's assuming money market funds, that it's as if you had the entire past financial crisis from 2007 to 2009 or 10 packed into the last 4 or 5 weeks. So we'll try and make some sense of all of that for you. But yeah, here was another whopper that I thought also captured it well. In short, every single day, the Fed will purchase $75 billion worth of treasuries, an additional $50 billion worth of mortgage securities for a total of $125 billion each day, or an unprecedented $625 billion for the week, or more than the Fed's entire QE2, which was just over 500 billion in purchases over 7 months. So remember the whole deal about QE2, which was launched in November, I believe it was October, November of 2010. And that was shortly before silver went to $50. And that was 500 billion over 7 months. Now the Fed is printing 625 billion in a week. Geez, perhaps not a surprise that physical bullion dealers are running out of metals. So let's take a look. Another also thought this was interesting. They're going to be buying treasuries and agency mortgage-backed securities subject to reasonable prices, which reminds me of another article I read earlier today about how some of the banks were front running, or maybe not banks, but some parties were front running credit indexes because they know what the Fed's going to do, and subject to reasonable prices. Well, everybody knows you're going to buy it, so any market maker on the other side of that is probably leaning their market just a little bit. And then here you go, adding to the unprecedented expansion in QE. The already purchased 375 billion since the resumption of QE means that starting Friday the 13th and ending this coming Friday, the Fed will have purchased just over $1 trillion in treasuries and mortgage-backed securities. So 2 weeks, up to $1 trillion. And keep in mind, that's just the beginning, because on Monday, the Fed announced unlimited quantitative easing. So we'll see how big those numbers get. Of course, over in the political side, I guess you could say these things, you can see Sanders threatens to hold up coronavirus bill, although there's the key takeaway: vote on a $2 trillion coronavirus relief bill. Keep in mind, last week that was 850 billion. That became $1 trillion by the end of the day. Now it's up to 2. We'll see what the number comes in at. Quick look at our bond yield, 84 basis points on the 10-year today. Japanese 10-year, look at that, yielding 0.024. Well, they had a president who, with all due respect, did run on a hyperinflation campaign, which he delivered on. And there is the negative yielding bund. So money printing galore. Again, in terms of the stimulus, Congress likely to send taxpayers $1,200 checks in coronavirus aid. The main thing that pops to mind is how the government is going to fund all this, and perhaps not entirely unconnected with the Fed purchasing over $1 trillion of securities in about 2 weeks. Yeah, not even 2 weeks. Friday the 13th. So yeah, that's about 12 days, or by the end of 2 weeks. Either way, it sure is a lot. And perhaps is no coincidence that gold markets snarled by virus lockdown as world races for haven, logistical disruptions causing mismatch in New York, London pricing, just as demand for metals soars with investors seeking a safe haven. So, while certainly over the last 4 weeks, we've seen gold and silver get pummeled a couple of times, gold really has kind of held in there. I mean, yesterday almost touched $1,700 a couple of times. So while it hasn't rallied quite like the treasury market has, still gold hanging in there, and every reason to expect more going forward. And listen to some of these again. Take the quote with like a grain of salt, but this isn't anything that we've seen in a generation because refiners never had to shut down. Not in war, not in the great financial crisis, not in natural disasters, said Tai Wong, the head of metals derivatives tradings at BMO Capital Markets. Okay, we had those guys back in New York. It's never happened, and happened astonishingly rapidly. And then perhaps even better than that, at issue is whether there will be enough gold in New York to deliver against futures contracts traded on the COMEX. So certainly a lot of smoke. Again, I would point out, as excited as again, I'm not gonna hide. I'm a big silver fan. I like metals. I think they're highly undervalued. With that said, does this mean that it's off to the races? Not necessarily yet. I mean, it's possible that the metal in storage is still there and logistics are making it difficult, or if you've just had a surge of and dealers are out of minted product. I'm not sure that that's the case, and certainly have seen a lot of interesting viewpoints out there, but certainly we'll see. Now, in terms of the gold price, we can see Wednesday night here sitting around 1605. So quite a volatile week, as you can see, especially that red line yesterday. I wonder if the Department of Justice has any comment on that. Would sure love to hear. If I wonder if that is spoofing right there. That would be interesting to know. Silver at 1431. So silver had quite a rally over a couple of days. We've had surges in silver sales. And yeah, good news. I know everyone's been excited about Andy Schechtman lately. It looks like we'll be able to grab him for a couple minutes Thursday morning. So stay tuned. As you can see, a quick look at the silver miners, mostly up, not quite the big rallies of the past couple of days, but First Majestic up 18 cents there. Silvercrest up a dime. A few, a little bit mixed, but largely up. Before we wrap up for tonight, I had a couple charts to show you. These are courtesy of the great Nick Laird at Gold Charts Are Us. And let's see. First, we have the weekly transparent silver holdings. And I bring this up here because, over the past couple of weeks, when you had the surge in physical demand, yet the price of silver on the COMEX was falling, a lot of people were saying, well, there were a lot of margin calls in the market, and people were liquidating and had to sell assets like SLV to fund margin calls. Although, as hopefully I would have noticed on my own, although I'd like to give Ted Butler credit for pointing this out in his column, that the only problem with that is that here you see on the bottom, this is, move that picture out of there, weekly change. So about 25 million ounces were added over the past 2 weeks. Slight withdrawal the prior 2 weeks to that, but each time less than 5 million ounces. So I just thought that was interesting because, again, people are saying that, all right, you have institutional investors who aren't gold bugs and they were selling their SLV, yet that does not match what we are seeing here in the data. Here is the chart. You can see down here, 4-week change shows 22 million ounces net have gone in over the past 4 weeks. And right here is SLV, 14 million ounces going in there. So again, just to take a look at gold, you see really, here's 2019, really over the summer when the price was rallying last year, was a lot of metal flowing into the ETFs. And that's really continued throughout 2020, as you can see, down slightly in the past week in particular, but overall, and that would actually make sense. I mean, they're at least matching the price somewhat. And lastly, we have the COT charts. Well, I just thought it was interesting seeing the chart in this format. Here's the gold price. So kind of fluttering along there, rallying, just got hammered there. Yet look at silver in comparison, downward trending, uh, then goes up for a while. But I mean, keep in mind, gold still on the higher end of the range, whereas silver, as you can see, and as is often the case, a little bit tatered. Although, I mean, I guess if you're buying silver now, it is on sale, so that's a plus. And also, again, just I'm interested to keep an eye on these updates with what's going on these exchanges, whether there are liquidity issues. And actually, in honor of that, good news to report, the audio version of the Big Silver Short is going to be available this Friday, which would be March 27th. And I'll be doing a live webinar, the Big Silver Short Q&A webinar. We can talk about liquidity issues with the LBMA, the COMEX, the book. I'm actually doing one final proof through the audio as we speak. And it was a sequence of 15 interviews, similar to what I do on the show, but you have Ted Butler, Andrew McGuire, David Morgan, all on this specific issue of the silver manipulation, which could possibly even be unfolding as we see here. So, LBMA colludes with the COMEX. Why are these things happening? We simply don't know yet, but that's what the book was about. And as I've been going through it again, this is the first time listening through just all the way straight through, not editing or actually doing the interview. And I mean, it's really fascinating, especially with what's going on. So I think you guys will love it. And we're going to have a party on Friday. So Friday night on the channel. I'll have details about time and all that stuff tomorrow. But with that said, thank you as always for watching. And if you're wondering how the gold market is going to respond to unlimited quantitative easing out of the Federal Reserve, well, then stay tuned because here you go.